We've been exploring financial fitness over the last few weeks and taking a look at the three main areas of your life that affect your financial wellness: what you earn, what you spend, and what you save. First, we covered different approaches to income and how to align your goals with what you're bringing in. And then we talked about how taking an honest look at how and where you're spending your money impacts you. Today, we're going to explore the final aspect of financial health, and that topic is what you save. So take a look back at those goals that you wrote down last week. Those are the 5 goals that we said, what do you want to be spending your money towards? Are you saving your money towards them? How are you doing that? Now, your goals may not be socking away for a lot for retirement or paying for your kids' college in full. I get that. Other goals are important too, and please don't be afraid to share them with us in your next quarterly meeting here in the office, or for you new folks at your initial planning meeting. Some people are really embarrassed that retirement and college aren't their main goals, or that there's something else they'd rather do with their money. And I'll say the same thing here that I said about spending. This area is a completely judgment-free zone. Now, if you're one of those people not making the same financial decisions as those around you and you feel like the odd man out, take heart. I can assure you that most people who do the traditional, quote-unquote, way tend to be more vocal than those who don't. And those who march to their own drummers in making financial decisions aren't wrong. They're just wired differently. And I'll admit that. A few years into my career, this drove me crazy. But now I know that it's just all part of the wonderful differences that we all have. Financial matters aren't always black and white. One question I often get about savings and goals is whether they ever need to be adjusted. The simple answer is yes, but I'm not going to tell you just to save more and more and more like you're probably thinking I should as a financial planner. One reason I always ask how much is in your checking and your savings accounts during our planning meetings here in this office is to decipher your current pattern of spending and savings. For example, maybe we decided that $25,000 is a good amount for you to have in your emergency fund, and you typically keep around $5,000 in checking. If you're on a call with us and you tell us that your checking account suddenly has $75,000 balance and your emergency fund has doubled to $50,000, then I'm going to ask, what's up? Because something has clearly happened. Why are you suddenly hoarding cash? I mean, maybe it's a simple story, right? As a good year at work and it resulted in a really nice bonus, or you came across an inheritance, or perhaps you sold some property. Well, but just as often we hear that the client is worried about keeping a job as the company has been in the midst of layoffs, right? The 3rd round in 2 years, and they're saving for a kitchen remodel. Or they know they need a new car, but they're not really sure what the cost will be, even though they've never spent more than $50,000 on a car. In each of these scenarios, there's an event with an unknown cost. And I know as a financial planner that when people are unsure, they tend to lock down and freeze up. And I also know that you only have one shot, though, at saving for your retirement goals. And I don't want to see that cash simply just remain idle when it could be working for you as hard as you work to earn it. In these cases, I make a mental note and say, well, it's okay to carry a cash balance for a little longer because there's some indecision, but I don't want a few months of indecision to turn into a few years of indecision and lost money. Of course, when it comes to saving, it is always best to start out with that fundamental but often overlooked emergency fund. How much to save in an emergency fund is one of the most common questions that we get. And the answer is simple. It depends. Right? Simple. Are you a W-2 employee with regular, reliable income, or are you a contract worker? Is your job seasonal? If you're in an eat-what-you-kill profession or self-employed, you'll need more money to tide you through the lean times. Whatever your sleep-at-night number, though, is, we can help you find it and we can help you work towards it. And I personally believe that everyone should automate as much as possible so that savings feels like any other utility bill that you have to pay every month. You just have to pay it. The best saving strategies are built on an out-of-sight, out-of-mind philosophy. And automating that goal takes away the monthly budgetary constraints that often prevent folks from writing that check. And if you're self-employed or in the eat-what-you-kill sales job that makes a fixed monthly amount harder to stick to, then you have the best of both worlds. You often have the ability to make as much money as you want But I also know that many people in this situation often reward themselves handsomely, and there isn't much left over to save after you spend. So I suggest, as many of you have done, that you intentionally and deliberately take out a piece of paper and write down how much you want to save each year, and then share that with us. Or ask us to tell you how much you should be saving to make to your goals, and we'll share that with you. Then we'll put dates on those numbers, and our team will hold you accountable with a phone call when it is time to write the check. And then we'll leave you alone, I promise. I'm already doing this with actually many of you, and often a simple phone call is the best accountability. I recently shared a strategy I used when I first started savings. Once I hit my emergency fund goal, I kept socking money into the account each month. Then at the end of the month, if there was still money left over above my target balance, I'd take the surplus out and I'd go on vacation. Of course, if you're saving for a new car, a second home, or you want to buy those fancy shoes, you can fill in the blank of how you spend that surplus or decide to keep it building. But over years, you'll have some excess. Some years your car and your HVAC will die, and other times there'll be nothing that happens, and you have some extra cushion. But once that cushion is established, don't be afraid to spend it and have a little bit of fun, right? When life hasn't thrown you any curveballs. And now you're thinking, well, Dave, when I wrote down all those things I'd spend money on if the money were no object, an emergency fund wasn't on the list. I know. I'm sorry. But we have to cover the basics first. Not having a safety net in place to cover life's what-ifs creates financial stress, especially when one of those what-ifs actually occurs, which, let's face it, it will. So if you have questions about saving or what an emergency fund balance and what amount would help you sleep well at night, please just give us a call. We'll help you figure it out. We're only a phone call away.